Now, China's market for group buying seemed to have endless potential just 1 year ago. With a surge in e-commerce, the number of group buying sites here took off, with many seeing business boom. A market report by Gotuan.net revealed sales from group buying in China reached $948 million in the first half of 2011. That's more than the total amount a year earlier. But according to ChinaNews.com, the market's honeymoon phase didn't last for long. With many sites lacking proper business models as well as sufficient oversight, consumer complaints started to pour in during the second half of last year. As a result, a number of websites went bankrupt. In fact, according to industry statistics, the number of operating group buying sites in the country had plummeted from 6,000 at its peak to less than 2,000 at the end of last year. The entire industry's gross profit ratio also took a hit, falling from 20% at the start of 2011 to less than 10% by the end. Furthermore, increased competition at the top forced many companies to make some big internal changes. According to data from iResearch consulting agency, about 20 companies dominate the market here, making up for more than 90% of group buying sales and clenching about 60% of the consumer base. Industry experts say that's simply too many sites going head-to-head at the front of the pack. As a result, many have been forced to downsize recently. Last August, Gaopang, which was established by US-based Groupon, cut about one-third its staff. Other companies soon followed suit, with Meituan.com, Groupon.cn, Wowotuan.org, and Lasho.com all reducing their number of employees. Industry experts forecast that tough times will tighten up selection at the top, and that as few as 3 to 5 companies may hold 90% of the market share by the end of this year. And the market for group buying hasn't just been cooling here in China. Citing data from U.S. investment analysis institution Susquehanna Financial, China Daily recently reported that more than half of Groupon's merchants are not planning on featuring daily deals in the next 6 months. The report didn't go over well with investors. The company's stock tumbled 6.6% to $19.27 per share, which is even lower than its $20 initial public offering price. And don't go anywhere, because when we come back, we're talking about the bright side to the decrease in sites from a consumer standpoint and looking at what companies are doing to turn business around. That's up next.